It's hard to get a job right now. I know a few people that are in the job markets. And it's not that you're seeing mass layoffs, although you are starting to see some layoffs. You look at the tech giants, Meta just announced a layoff, and it's a performance-based layoff. Microsoft just announced a layoff. That's a performance-based layoff. And you start to think about, we had this year of reckoning a couple years ago where Meta stock just got absolutely nuked. It was down 75% or something like that. And what they said was, well, we're sorry. We didn't mean we were going to build out this metaverse.
All righty, folks. It is inflation week. We will get CPI, I think, on Wednesday and PPI on Thursday. We're going to talk about what those will look like, what it means for the Fed. Will we get a March rate cut, and so much more. Taylor, how you doing, buddy?
I'm doing great. It seems like the news cycle's so fast that we just had a CPI print, and it was like it just happened, but it's already up here again. It's monthly, and it's time. And it's interesting because last week, again, we talked about this on one of the prior videos. It's like, listen, consumer right now thinks inflation's going higher. And one of the things that, Jerome Powell focuses a ton on is the consumer, are inflation expectations well anchored? And that's been something that has been well anchored for a long period of time now. And now they've come unhinged a little bit in the short term. Now, does that actually impact the inflation report we get on Wednesday? No, the inflation long-term expectations aren't going to do that. But it will be interesting to see what comes out on Wednesday. I'm interested to hear your thoughts because I have some expectations myself. But go ahead.
Yeah, so I've been telling my audience for 6 months this is coming. So we'll remind folks, we're going to have we should have a very positive base effect.
Right.
Meaning a big number falls off,
right,
and a smaller number is expected.
Right.
So how would that be represented in the data? Right now, as I've seen expectations, both headline and core are both expected to tick down.
Correct.
1/10.
Correct.
So 2.9 to 2.8, 3.2 to 3.1. Right. Headline core.
Yep. After 3 months of acceleration, at least on headline.
Yeah, headline going up. Like the trend on headline's the wrong way.
Correct.
So I have a very sneaky suspicion that one of these numbers is going to come in flat and not down.
Mm-hmm.
And I don't think the market's ready for that.
Yeah. I tend to think you're right.
I thought we disagree.
No, I tend to think you're right. And the reason that I tend to think you're right is because typically Q1 is a period of time where inflation pops. And it makes total sense. There's a ton of logic behind it. Just saying, like, listen, end of the year, people take a look at their businesses and they go, all right, we're going to adjust the price for inflation. And so typically Q1, you get a pop, and you saw a meaningful pop last year in Q1 to the point where people thought, we actually are going to have inflation off to the races again. And then it became more subdued throughout the rest of the year. But Q1 was a nasty time. And it's not that the numbers are going to be so eye-opening. It's that the trajectory isn't going to be as rosy as people anticipated, I think.
Yeah, and I think Jerome Powell said it in his press briefing. I don't remember the exact quote, but it was essentially, yes, I know that inflation is set up to look better, but actually looking better is, something like that.
That's also the point of, like, listen, because we get a roll off of an old number, the new number looks good, doesn't mean SHIT. It's the reality of, like, okay, where's inflation actually? What are prices doing right now? Are they going higher? Are they going lower? What rolled off last year? Doesn't matter.
Yeah, it's going to be very interesting because it feels to me the market is set up to believe that this is going to be the first of 3 months in a row. To your point, Q1 last year was bad. There are 3 months in a row where the base effect should be a positive help.
Mm-hmm.
And if we don't get that on Wednesday, I think it's an ugly day.
Yeah, and I just don't see rate cuts coming for a relatively prolonged period of time. I just can't wrap my head around the logic of why it's needed. The market has proven that, at least with unemployment right now ticking down again.
4%. Where did that come from?
And we're talking about cutting interest rates because we're at some fictitious neutral rate or not at some fictitious neutral rate. Reality is everyone wants a job and that has got one for the most part. I will say this, getting hired has become a little harder, right?
Yes.
So finding a job has become harder, But the overall employment numbers are still remarkably positive without interest rates coming down from here. And why would you continue to compress them with inflation being still an unknown barrier on the other side?
Yeah, it's really interesting because what I've told people for months now is, for a long time, I would always look at the weekly unemployment claims. It was kind of like that once a week drumbeat, like what's going on. But I actually fear that 2025 is going to make continuing claims the number to watch, because I do think we have a duration risk.
Agreed. It's hard to get a job right now. I know a few people that are in the job markets, and it's not that you're seeing mass layoffs, although you are starting to see some layoffs. You look at the tech giants. Meta just announced a layoff, and it's a performance-based layoff. Microsoft just announced a layoff. That's a performance-based layoff. And you start to think about, we had this year of reckoning a couple years ago where Meta stock just got absolutely nuked. It was down 75% or something like that. And what they said was, well, we're sorry. We didn't mean we were going to build out this metaverse. We're going to get back to religion and we're going to cut spending. Now, what's interesting right now, though, is that Meta has not talked about cutting spending. They talked about a high level of CapEx.
75 billion or some crazy number?
Billion. Yep. And Microsoft, one of the bigs was 100 billion. I believe it was Microsoft. Wow. But it seems like what they're doing is now shifting from, okay, we're not going to spend our CapEx on increasing talent. We're going to spend it on increasing capability on the AI front. And maybe what they're saying is we're actually going to start to see some productivity out of this AI spend, and therefore we can lay off on the other end. Who knows?
Yeah, and the other one that we talked about in a previous episode that I think is a wild card is DC. Totally. Right? Like when I look at what could happen in the federal government, to your point, government has been really the only growth engine for jobs for years.
Right.
I mean, man, you see 100,000 folks from the federal government out of work. Now, again, it'll be handled differently because it seems like they're all going to get 8 months of severance or whatever that number is.
Right.
But that's still.
Oh, they're still going to, the purse strings still get tightened. If you get laid off and they say, we'll pay you for 8 months, you're still going, all right, I'm going to start to conserve, no doubt. So that could be a help.
Yeah. It's just really, that's why I keep saying 2025 is like the next 6 months are just chaos. It's just chaos. The news cycle is faster than it's ever been. Things coming left, right, and center. It's just.
Yeah, I heard an interesting take on just the news cycle and the chaotic environment that we're in. And basically they were making the comment that like no one has the political wherewithal right now to combat anything that Trump's saying. So he can kind of push through everything because he just swept the nation from a voting standpoint. And it's clear that voters like his means of getting things done. And so therefore, if you're a Republican specifically, where you might, Democrats are going to do what they're going to do against Trump potentially. But if you're a Republican right now that would like to say, hey, I don't know that I like these steel tariffs on our closest trading partner, they're not going to do that because that's going against Trump, who's got the entire base of the Republican Party as a tailwind. So they're just sitting down there and going, whatever he says, we're just going to let happen. And no shock, like Trump's a bit of a wild card, right? That's why he got voted into office, because people want to shake the apple cart up a little bit, and he's doing it.
No, he's definitely doing it. Well, I don't know if you saw this. I saw it yesterday. I thought it's something I've heard about for years now. And that is the penny is going bye-bye, right? For years now, the penny has actually cost us more than a penny to make. In 2024, apparently the penny cost us 3.69 cents to make. So awesome. The penny's going away.
But we have to make decisions like that more quickly.
Yeah, it's just like this is stupid.
Nothing costs a penny. Everything can be priced in 5-cent increments. What are we doing?
Yeah. So you're in favor of making the penny be a collectible item.
What, you an idiot? If it costs you 3.6 cents to make and it's worth 1 cent, like this one.
What are you doing?
This one's not hard. And by the way, if any of the other increments of coins that we have cost more money, make them smaller. Like,
you know what? It's funny you bring that up because I actually looked this morning. I'm like, okay, a penny's gone, but what does it cost to make a nickel? What does it cost? So it actually, like, nickel's expensive, right? It actually cost us, I'm going to go from memory, I think it was 14 cents to make a nickel.
So make it copper. Make the penny a nickel.
Exactly.
Whatever.
Done. Done. But good news is a dime costs less, a quarter costs less, 50-cent piece costs less. So every other increment of our coinage, it costs less to make than the face value.
So use a different material to make a nickel. This isn't
Done.
rocket science.
Done. And get rid of the penny.
Right, right. You're adding to our federal deficit by producing a penny.
Every penny.
And a nickel.
Every penny, every nickel.
What are we doing?
This is not hard, folks. Make these things go away. Oh,
See, we
man.
can bend this curve.
Yeah, there you go. Bend the curve. $1 million here and $1 million there. It all gets better over time. This is funny. So let's talk about the Fed real quick. So again, we're actually both kind of negative on CPI this week, which is interesting. What are the odds of a March rate cut? They got to be low, right?
Oh, I think non-existent. Basically,
yeah, they've got to be.
Yeah.
All the Fed presidents.
I haven't looked at them recently, but they've got to be non-existent. Yeah.
Yeah. Is the Fed does the Fed Watch tool currently still call for 2 rate cuts this year? Last time you checked.
Yeah, I can literally pull it up as we're talking right now. But yes, so I've got it right here. In March, there is an 8.5% chance.
Oh,
so,
single digits. Okay.
Yeah, better than I would have anticipated. And then when it comes to the entire year, it's a higher likelihood right now at 34% that there is 1 cut, closely tracked by 2 cuts at 30%.
What's the odds of 0?
The odds of 0 cuts?
Yes.
It's 15, 16%. So
that's where I've
not
been
that far behind. Yeah.
I have been there for, I don't know, months now. No cuts in 25.
Yeah. I mean, we collectively have been on the same side of this one of saying like, we don't get it.
Yeah, I don't get it. What are you guys doing?
7 cuts last year. That's not happening.
Yeah. We've been right on this one so far. Taylor, do me a favor. Where can people find you?
Yeah, go over and follow us on Instagram, on TikTok, even on LinkedIn. I put out every video across all 3 of them, 60-second videos every day.
Very cool, bud. Take care.
You're the man.